What's up, everyone? It's E-Money, your best financial friend. Hey, look, it's getting towards the end of 2024, and we wanted to make sure that you guys had some kind of a checklist of things that you can do prior to the end of the year to really make sure that you're going to be on track for your 2025. I mean, the end of the year is coming right now, and we can't wait until January 1st to get these things done. So myself and Eric go through a checklist of things that every practice owner, every business owner should be going over to ensure that they're going to have a much better financial year in 2025. So I know you'll enjoy it. As always, please give us support. Please like, share, subscribe, so that we'll continue to do these fun YouTube videos that we love to do and talk about financial topics that are relevant to you. And as always, if you guys, most people do not have a plan at all of what to do for retirement, for their taxes, for exiting, any of those things. So if you have questions, go to our website, econologicsfinancialadvisors.com. Schedule an intro call with one of our advisors, and we can get you on the right track. Okay, enjoy the podcast. Talk to you soon. We are back, and it's almost the end of the year. You believe it or not, I can't believe it's almost the end of the year.
I know.
It's crazy.
It just goes faster and faster the older you get.
I know.
True.
And there's always like a rush to get a bunch of things done towards the end of the year, which I understand, and I think everybody does it. It really helps to have like checklists. I'm telling you, like we have a monthly checklist for at least for compliance purposes. We just run it every single year.
We should make a checklist out of this webinar, or not webinar, podcast. We'll get with marketing on that.
Yeah, we probably should, shouldn't we?
Yeah.
But I mean, it's good to have checklists so you can just like, okay, these are the end of year things that I know that we have to do that are going to allow us to really get into the next year, without like waking up on January 1st and like, oh, I better do my planning right now. It's like, no, you should be doing your planning like 2 months in advance.
Right.
Okay. But there are, I think we have like eight things on this checklist that I think everyone should be, that you can do. Simple, easy. And I think it's going to be beneficial for you going forward.
Yep.
So let's start with number one. What's the first thing I should be doing right now?
Price increases on your services.
Damn.
Inflation happens every year, so your prices have to go up.
So you're not even like thinking about it. You're not even doing an evaluation. You're just going to raise prices.
Yeah.
Right away. God,
yeah.
You're savage, Gersch. Jeez.
I mean, I'm not saying you got to jack your prices up 10%, but I mean, like this year, right? Inflation's about 2.5%.
Yeah.
So you got to do a 3% increase at least just to stay steady.
Yep. I get it. Then all the patients start bitching and complaining.
No, they don't. Very seldomly. I have people, obviously I'm on top of price increases, and it is extremely rare to have patients bitch about it. It's extremely rare to have them even notice it, honestly.
Yeah. What if you don't have control over your price increases?
Well, yeah, there are situations, obviously, like if you're a insurance,
Yeah. I think those people need to look at the insurances they have to do the exact opposite. Look at insurances that aren't paying them very much and drop those things.
That, and you can, I'm not saying you'll be successful, but you can renegotiate contracts with insurance.
Yeah.
So
and it's not going to happen if you don't at least ask.
Exactly. So, but even those people, right? Like physical therapists, yes, they're largely insurance reimbursement based, but there still is a cash component. There's still cash services. There's cash patients. Those you can do a price increase there. True.
Okay. So raise prices.
Yeah.
Yeah. All right.
Number 2.
Yeah.
Raise your rent if you own the building.
Yeah.
Don't just offer to pay your landlord more.
Man, I see this one missed all the time.
Oh, yeah.
And it's funny because once you sell the practice and you sell it to a corporation, you know, they're going to give you a price increase every single year.
Yeah, they're going to rent it from you based on the, fair market value of price per square foot.
Yep.
So,
and then what are the step ups usually percentage wise every single year? 2%, 3%?
2 to 3.
Yeah.
Yeah.
So
that's what you should be doing.
Yeah. So this is where we're trying to teach you guys that you have to treat your building like a separate investment asset, which it is, and make sure that there's a lease agreement in place with the practice and the building LLC. And then make sure that you have an arrangement where it's automatically increasing every single year, at least 2 or 3%.
Yeah.
And
you want to, you want your business paying, even if you're paying yourself, you still want to pay fair market rates, because if you're paying under fair market rates, sure, the profit on your business looks higher, but it's not real.
No. And then how many people just pay enough in rent just to cover the mortgage and that's it?
A lot.
Which is another problem. So make the adjustment on your rent so that it is cash flowing you personally as an investment, and it's providing you as an investment. Okay. And stop treating it as just like, well, the practice is paying off the mortgage, so I'm good. It's like, no,
yeah, if you, if you do this appropriately, you should be using your building as another way to force money out of the practice to yourself.
Yeah.
That's how you got to look at it.
Yeah, for sure. Okay. Good. What's number 3?
Number 3, any last minute IRA, 401k, retirement contributions.
Yeah. I mean,
or HSAs, health savings accounts.
Yeah.
All those accounts that give you tax benefits.
Yeah. So HSA, if you have a health plan that allows for HSAs, you should definitely do that. I forgot the amounts that you can contribute. I think
it's $8,300 this year for a family.
For
that's someone married.
Yeah, that's not nothing. That's something. And when does that due? Is that due by December or is that April?
That's April.
I think it's April. Yeah.
It is.
But yeah, all the other last minute contributions are, certainly not going to hurt. And if you're, obviously you have IRA contributions, profit sharing contributions, all those things.
Yep.
I think are going to be a benefit at some point in time. So
absolutely. So
take advantage of them.
Yeah. Especially if you have extra profit or your taxes are higher than what you expected, or,
Yep.
But you should take advantage of it regardless.
I think so.
So
what's
yeah, 4? Number 4, and this is something to do in January, early January, but a review of your profit and loss, your income and expenses.
Oh my God. Yes.
We shouldn't even have to say that. But
I mean, that should be done monthly anyway, but you should get a year-end P&L statement, and then you guys should go over that. And if you're smart, you would work with someone like us who will go over that with you.
I go through it with every client. And
to make sure that you look at your different buckets of expenses and make sure that you're in alignment with where you need to be, at least going into 2025.
Yeah.
Like if your payroll is like at 65% at the end of the year, you got a problem.
You think?
Okay. If your cost of goods sold is like 32%, you got a problem.
Yeah.
Okay. And these are all things that you're only going to actually be able to handle if you actually know where the issue is.
Yeah.
And, that's only going to happen if you actually look at the data.
Yeah. You got to know, where am I at and where do I need to be?
Yeah.
And then you can work on getting there.
And it's not hard to do a profit and loss review. I mean, it's pretty simple, and then structure the P&L so it makes sense to you, so that you guys can see like, this is what we're paying in blank, and this is what we're paying in legal fees and accounting. and at least it establishes a method for you to, like, make some decisions, for crying out loud.
Exactly. Right. Got to know your numbers.
Yep, you definitely do.
It's the basis of everything.
What's 5?
So, yeah, P&L review. Another thing you should be reviewing is your insurance and the benefits that you offer through the practice.
Yeah, I mean, we're doing that right now, and it's certainly, a task, because
it's not fun.
It just seems like costs go up every single year on these things, and, you're going to have to, like, sometimes make some tough decisions, and, but, you can't benefit your way. You don't want to, like, benefit your way into insolvency. So you need to make sure that you're keeping on top of, all the benefits that you're paying, if you are, because some people aren't. But
of course,
yeah, I think it's pretty prudent to make sure that you're looking at all those things.
Shopping healthcare plans.
Yeah,
that's really the big one, is healthcare. I mean, dental, optical, if you provide those are so cheap.
Those are pretty small.
Don't really change much, but healthcare.
The retirement plans are, generally pretty nominal expenses, I think.
Yeah.
But you should still have someone just review it and just make sure you're not overpaying for certain things.
Especially as the plan gets bigger.
Yeah, because that will happen.
Yep.
As you throw more money in there. So maybe you can get a break on the administrative expense or whatever it would be.
Exactly.
But yeah, it's definitely good. And not only that, make sure that you're renewing all your insurances and don't forget anything, especially your liability insurance and some of those other things as well.
Yep. Yeah. So insurance review.
Okay.
Another one, tax review, and looking at, and we kind of hit on this a little bit with the IRA 401k stuff, but what can I do to reduce my taxes? So I think everybody should get with their CPA in December and know, where are we at for profit? Have we paid enough in? What can we do to get the dollar amount down?
Yeah, I mean, if you haven't done it yet, you definitely should be doing that. Honestly, I would hope that that's something that we would like you to do at least every quarter.
Yes.
Is to be meeting with your CPA every quarter, because you are going to have those years where, maybe you didn't have some big expenses that you could utilize and your numbers have went up, and all of a sudden you're going to have this ginormous tax liability that you don't even see coming.
No, it happens every year to two or three people where they call in and they're in a frenzy because they made way more than they're used to, and they don't know how, but now they owe a bunch of money.
It's like a midnight tornado in Oklahoma. You can't even see it coming, but it's going to blow you over. So I think this goes back to, like, good tax practices, which is the frequency in which you're talking with your CPA or bookkeeper, whoever it is, and making sure, like, you guys are, like, going over your numbers and, like, here's our P&L right now, and these are the estimates that we've been setting aside. Are we good, or do I need to increase that?
Yep.
And then actually the better thing would be, how do we reduce the tax liability at the end of the year?
Exactly.
So, because I know one of our other advisors has a client right now looking at some reinsurance programs and such that, are some advanced tax strategies, because they're going to have a big tax liability. She knows it, but at least
there's always something you can do.
Yeah. she can do something about it right now.
Yep.
To be able to take advantage of whatever tax laws are expiring, and, whatever needs to be done at that point.
But you got to look at it before year end, because after the 31st, there's still a couple of things you can do, but it's very, very limited.
Yeah, that makes sense.
So, yeah, another one, and this kind of goes hand in hand with the P&L review, right? When you do a P&L review, you're looking at what happened, but you should also be looking at what do we want for the next year, is setting targets for revenues, for expenses, for savings.
Yep.
having all, knowing your targets.
Yeah. So look, you should know what you're going to have to do. Like right now, we know exactly what we need to do next year.
Yep.
Okay. We've already mapped it out. We'll communicate it to everybody, but I mean, we know what the numbers need to be already for next year. Okay. And then that way people can work backwards as far as like, okay, this is what we need to produce. This is what, whatever it is then to allow you to get your job done, you know what to do.
Yes.
Okay. But that should be a conversation that you have at least a month prior to the end of the year.
Yeah.
Because you know what happens at the end of the year? Everyone's got holidays, everyone's taking time off, spend time with their family.
Yeah, life gets busy.
And then once January hits, it's like, now we have to do the forecast for the year. It's like, no.
No, that should have been done.
that should have already been done. People should be knowing when they're returning back to work, like, okay, we're back, and that's the number. So know your make break numbers going into 2025. Make sure you guys know what everything that drives that make break number. And yeah, just make sure you have the right targets for the next year for everybody. I think they appreciate that when they know going in.
But yes, you need to know what the goals are for the year before you get into the year.
Revenue goals for the year, everything mapped out, knowing, what each of your associates needs to be producing, making sure that they're certain and set on what their expectations are for the next year. Like that's all got to be mapped out, planned out so they know.
Yep. And then the last one, and this one's specific just to this year. This isn't something you guys are going to have to do every year. But the beneficial ownership interest forms.
Yep.
Sounds super exciting, right?
Yep.
So this is a new requirement for any business entity, LLC, S Corp, C Corp, partnership, yada, yada, yada. You have to file a form with FinCEN, the Financial Crimes Enforcement Network, that basically what it does is it discloses who benefits from the entity.
Yeah. Or who actually owns the entity.
Yep.
Right? Yeah. So I think we've done part of this already. I still have a couple more to do on some entities, but it's to get I forgot the number. There's some kind of a number you get assigned. It takes a little bit of work to do it, but you're going to have to do it.
Yeah, they're due by January 1st.
Yeah, you have to do this. Like there are very few people that are exempt.
Yep.
Okay. And I forgot the number. Don't quote me on this, but I think you have to have at least like 50 employees somewhere around there. Or do over 5 million in revenue or both to be exempt. So most of the clientele that we have for that business would not be exempt. But then if you have like any other LLCs for like your properties or for, limited partnership, whatever it is, you have to make sure that is filed as well. So it's not just for your main business. It's for any business entity that you have.
Yeah. So for most of our clients, it's going to be the LLC for the real estate and the practice. Now, the exemptions are if you have 20 plus full-time employees and more than 5 million in gross receipts.
So both.
You have to meet both of those. So we'll probably have a couple people who are exempt, but 95% of our clients are not exempt.
Yeah, for that business. But even if you are exempt and that person still has other LLCs and limited partnerships, they have to file.
Oh, yeah, yeah.
For those. Okay. And the penalty for not filing, I want to say it was like $500 a day or something like that. It was huge. Up to, I think, a cap of $10,000. Now, you guys got to do your own research on this and make sure that you talk with your CPAs or your attorneys, because I know that they're doing all this, but you got to make sure you're doing this.
Yeah, $591 per day.
That's crazy.
It's going to add up quick.
Yeah. Does it have a cap on it?
I don't see anything about a cap.
Yeah. Okay.
That's the civil penalty. There are criminal penalties. I mean,
this you can actually it's crazy.
I wouldn't expect criminal penalties to be assessed on somebody who just didn't know about it. But
I would think there would be either. That's kind of cruel and unusual punishment.
They're still going to give you the late fees though.
Yeah, they're definitely going to do that. So, pay attention to that. Make sure that you guys are doing that. I can't stress that enough. You don't want to get hit with that fine.
It's not I've looked at the forms. They're not that tough. It's just a bunch of general information, name, address, EIN.
Yeah.
It's not, and I've had a number of clients do them themselves. It's relatively easy if you own 100%.
You can totally do it yourself. You just have to do it.
Yeah, you just have to do it. So if you go to Google and you search BOI filing, finsend.gov pops right up. Click on that and takes you right to a page where you can click to file.
Yep.
Can't make it any easier.
That's it. Okay, well, that's your year-end checklist right there. Make sure you guys do it. Doing those things right there, I tell you, your financial life's going to be better going into 2025.
Yeah, you're setting yourself up for success.
Yeah. Oh, did we forget one? Increase your profit distributions schedule to yourself as well.
Oh, yeah, that's part of the targets for next year. I don't think we really talked about it, but yeah,
no,
you should be saving ideally 10%.
Yep.
And if your revenue goes up, guess what? Your 10% goes up.
Yeah. So make your adjustments. So for people that are working with us, we have a system in which we're taking a percentage of your business revenue and channeling into that you personally on a schedule. Ideally, we want to get 10% of your practice revenue into something called a wealth storage account where you can use that to buy assets and build assets and, create a passive income sources. If you're not doing that, there is a very simple way to do it. If you are doing it, you have to make the adjustments so that your percentages are correct based upon how much revenue that you're doing.
Yes.
And it's the single most awesome thing that you can do for yourself going into 2025. So if you have questions on that, definitely reach out to us, but it will change your life if you do that. And I can assure you that will occur. So, okay, man, I think that's it.
Till next time.
Till next time.